Good afternoon and welcome to BizTech's Asian Midday Market Watch. Today we have Kelvin Wong, Senior Market Analyst from Oanda, as our guest today, the 23rd of June. Kelvin, good afternoon and great to have you on the show.
Happy Friday and good afternoon, Brian. Good to have you. Good to see you again.
Now, Kelvin, today we want to put the spotlight on Japan. There's a couple of key things that we've just come out. Japan's May inflation, Japan's flash June manufacturing and services PMI. Tell us more, Kelvin,
Sure.
and drill down in terms of what does this impact markets?
Okay, so let's start with the Japan nationwide inflation data for May first. So the data actually came in, to me, is rather mixed at this point in time because if you look at the headline inflation, so headline inflation came in at 3.2% year on year. So that is also below last month April data at 3.5% and below expectation of 4.1%. But if we look at the data, inflation data that strip out food and energy, that means we're talking about the core inflation rate. Actually, that data came in more than the April. It's at 4.3% year on year versus April figure of 4.1%. So that's actually close to a 40-year high in terms of the core rate, which is excluding fresh food and energy. So what it means for the Japan, especially Bank of Japan monetary policy, as we know that they are still in an ultra dovish mode, no clear signs of any signs of normalization. So I believe at this point in time, they are still actually caught in between the rocks over here. So, but I do believe that if the core inflation data still start to show further upside appreciation, especially in the next week, we will start to see the Tokyo CPI data for the month of May as well. So for the month of June, pardon me, that's for the month of June. So about next week. So that is more like a leading inflation data for Japan. Usually the nationwide will actually take the lead from the Tokyo data. So that will be an interesting data to watch to give more of a guidance or clue of where BOJ were about to go next. But now back to market implications. So as we know that very surprisingly, last night the dollar yen actually rallied by 100 points, 100 pips to actually trade close to slightly above 143 figure level. So that's actually the high that was seen in last November. So given this kind of a very mixed CPI data out for Japan, I do believe that the next key support level to watch will be 42.50, that key support that was taken out yesterday to actually keep any potential upside for the boost of dollar yen. All right. So now going to the Japan PMI data, that means the services PMI and the manufacturing PMI. I want to touch on especially on the manufacturing PMI. So the manufacturing PMI was actually in growth territory for the month of May. So actually they managed to rebound to 50.6. But for the flash June data, they actually unexpectedly dipped down to slightly a contraction territory again. So that's 49.8. So that's all below consensus of 50.7. On the other hand, the services flash PMI data for June still remains on the expansionary phase, but a bit at a slower phase compared to May. So they come in at 54.2 versus the May figure of 55.9, and also below expectation of 56.2. So we see a bit of what I call manufacturing contractionary scare in Japan. I think that is within expectation. To me, it's within expectation. Why? Because if you look at the external global economy, it still remains lackluster. And now, for the services side, it's still remaining rather robust, given that inbound tourism seems to be still a factor on the positive side to watch, especially during the June and July school holidays period or summer holidays period, we call it in Asia. So now implication on the Japanese stock market. So as we know that the Japanese stock market has been on a very strong uptrend since the start of this year, and this uptrend got more pronounced 3 months ago, that means the month of March. And from a technical analysis perspective, this medium term up move from March low, that means this year March low, seems a bit overextended. That means we start to see several medium-term indicators like the Bollinger Band, the RSI hitting extreme, not always relatively, I would say relatively overbought condition. So in the last 2 weeks, right, the Nikkei 225 is unable to break this key medium-term resistance of 33,800. So that's actually close to a 33-year high. So at this point in time, there's actually a key support to watch for there to actually to see any potential pullback to test that 30-day moving average, which is coming in as a support at 32,500 level.
Now, Kelvin, when it's end of the week, what should we be looking out for next week that could move
Oh,
markets?
okay. So for the next week data, right? Give me a minute. Okay, so for okay, 1 second. Okay, so for next week data, right? Next week data is rather not so much on the agenda. So the key data to watch out for will be from China, closer to Asia. We have this manufacturing PMI, which is really key as well for June. Then thereafter, we have a couple of related US data coming out towards the later part of the week. So on Friday, we have the core PCE price index, which is one of the key inflationary data that the
Mhm.
Fed tends to watch, and as well as personal and income spending and personal income and spending for US. So that will give a good gauge of the current consumer spending behavior in US, given the fact that the Fed has already mentioned in its latest guardian that interest rate will start to stay higher for a longer period of time.
Now, Kelvin, as always, thank you very much for your insights. Thanks for coming on the show.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, Senior Market Analyst at Oanda on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.